Hi, everybody. My name is Chris Tosin. I'm the head of risk analytics and automation at M&T Bank. While I'm currently focused in the risk management space, I have a background in AML, and I'm happy to guide this conversation today with some leading practitioners and innovators in AML and KYC initiatives. So let's get started by welcoming our panelists. First, we have Vishal Rajane. He's the head of global AML strategies and solutions and transformation at TD Bank. We also have Russell Perry. He's the founder and CEO of Company, and Steve Mumford, who is the president and CEO of Trulio. I know we have some limited time here, so I want to jump right into the questions. So Vishal, I'm actually going to start with you. We're in the age of big data, which offers enhanced opportunities to root out financial crime, but also presents a range of challenges as compliance teams are trying to struggle with the volumes that we're receiving out of typical red flag scenarios, as well as what you're getting from these new transactions and these new initiatives. How are you keeping up with all the data, with still being able to follow what regulators are expecting you guys to do around red flags?
Chris, that's a great topic. I love this topic, and I would love to hear perspectives from both Russell and Steve as to what they're seeing in the marketplace as well. From a TD perspective, we have sort of a two-prong approach, right? So there's already a lot of investments and strategies that exist today, and we plan to leverage them efficiently. For example, we started with some small proof of concepts in machine learning, in transaction monitoring. We've got ourselves comfortable with that and are now really pushing hard in that space as well. We also used to rely on point-by-point data ingestion strategies, and we are moving now towards a more curated form, i.e. curate once and use multiple times. The second thing is we're also looking at what our vendor partners have in the hopper. Just a word of advice that I always give to all my vendor partners is there's a lot of point solutions out there, so please come to us with solutions that we can sort of really understand and look at it more holistic, and how we apply that within our bank. And then the last but not most important piece is the changes that are happening in the AML regulations. There is a very heavy focus on innovation. Everything from regulating virtual currencies, information sharing, the SAR and the CTR requirements are being reviewed as well. So there's a renewed focus on innovation and technology. It's a pretty involved plan, and our collective ecosystem will need to evolve and closely review what we do as a collective front. That's really exciting. We all have a potential voice, a significant voice in shaping how this goes forward.
Thanks, Vishal. And I think you make a great point around regulators giving some free rein in this space. Russell, I'd like to hand it over to you, though. Given the things that you guys are doing, especially in machine learning and artificial intelligence, peers that I've talked to in different institutions have some concerns around being able to do this effectively in the money laundering space, specifically in suspicious activity monitoring. Conversations around not being able to code for empathy, or that biases are too much to overcome. I wonder if you could talk to us a little bit about that and how you see that happening, and where there's really is significant opportunity in that space.
Yeah, thank you, Chris. It's a good question because now that we have a lot of data, right? And there's more data becoming available, and now the question is how can we use that for compliance? How can we use that for risk modeling? And our approach is really focused on the data that's coming in initially. So when we're talking about machine learning or AI as a whole, the question is the data that I used and the data that has been used initially to identify companies and the people behind, does that have the highest level of veracity? Does it come from a trusted source? Does it come from a source where I can also ensure that it's audit proof and that there's also an audit trail of all the changes? And only then does it make sense from our side and the way we've set it up to then deploy AI machine learning technologies to then say, okay, let's make sense of this information. So I'll give you an example. We're highly specialized on shareholder information, identifying shareholder data sets or shareholder information that's hidden away, locked away in PDFs and filings across the world. So on one hand, the data is there, but it needs to be machine readable so you can actually use it afterwards. And obviously there is the factor that there is only a certain level of confidence when you're using machines to identify and analyze the data. So the human factor is always important, especially when it comes to risk modeling, when it comes to risk categorization, when it comes to verification of the counterparties and the people behind, right? And the human factor, I think, is something where this empathy question comes up and say, well, okay, this company, we know the players, we know how they're connected, so we will approve them to a certain limit, right? A machine will most likely not do that unless it's trained to do that. It can only be trained if the data is good, but at the same time, the human factor is just as important. So well, our approach here is to say, okay, if it is a machine learning analysis of, for example, shareholder information, the human factor here would, in the first stance, be to provide a confidence, a level of confidence that the data is correct. And it's very unbiased, right? Because you're saying, based on this information data set that I have, the testings and the analysis that I have done, this is the confidence. And then you can always bring in the human factor again, this empathy part, if there is, a certain client or if there's a certain client relationship, but that's based on secondary factors, not on primary factors.
The great answer. Maybe you could provide quickly a couple tips to institutions that are thinking about their data space of how to set themselves up for success to do this type of technology in the future. I know that, we struggle with that a little bit around consistency in our data and standardized data processes. So maybe a couple quick tips on that, Russell, if you can, for companies that are thinking about doing that.
Well, our suggestions are always, don't create a digital twin of an analog compliance process. Look at it, what can technology do to help, from the onboarding and the analysis and providing a machine readable data set with a high confidence score. So again, do not create a digital twin of an analog process because you won't have efficiency gains and it will not be as effective when it comes to compliance, especially money laundering, right? And anti-money laundering, obviously. And the other suggestion is to allow this an approach that you're working with dynamic data. Dynamic data also means that you do not have a yes, no answer, right? When it comes to KYB in this sense. But dynamic data means some data fields might not be available in one jurisdiction. So the systems that are set up for ERP, CRM, or customer lifecycle management with financial institutions or payment service providers need to be adapted to accept differences in the data sets and the dynamic data. And once you have that in place, also from an understanding from the IT department, which I think is always welcome, the fresh approach, but also all the way to the risk and the compliance department, say, okay, if there's data inconsistencies, let's accept it, but let's make sure there's transparency. And based on that transparency, you act according to internal AML and compliance guidelines.
Thanks, appreciate that. So it's actually a perfect segue into Steve. So, talking about innovative solutions and talking about data, clearly with COVID and with some of the things that are going on, consumer behavior has changed significantly, right? I know we've seen a lot more P2P transactions and more cash transactions and quite honestly, some situations where people are sitting on money. Can you talk a little bit about that and how COVID has sort of strained the conventional compliance measures and how you've had to get a little bit more creative to monitor those activities and weed out the nefarious stuff?
Yeah, I think everyone certainly is talking a lot about how COVID has accelerated everything digital, and certainly anyone in the KYC, KYB space has absolutely seen that. You mentioned people sitting on money. That's an interesting point. I would say COVID is also, it's brought on a lot of bricks and mortar companies going digital. Like we work with this large tax preparer, overnight in tax season, they had to go digital first. So we're seeing, a lot of things change quickly that way. But I think the bigger story is going to be around what people are now calling the democratization of financial products and people sitting on money and wanting to invest it and having the time or doing that from home. And certainly amongst our customers, we're just seeing an explosion of whether it's online trading platforms, people participating in crypto or other financial products. And it seems like most people, especially young people, are completely willing to go through that compliance process digitally, and whether that's just submitting their personal data or you know, even submitting photos or any other kinds of ID. But on the company side, it's amazing how quickly they have to ingest that data, make a quick decision. And the best example I think we saw was during the GameStop trading activity back in January, when Robinhood, you know, basically restricted a number of accounts from trading on GameStop. We saw, amongst our other online trading platforms, you know, within the matter of minutes or hours, you know, over 500,000 new accounts being opened across a whole other set of digital platforms. And now, if you can imagine the stress and the pressure it puts on the compliance folks at those organizations, and really the consumer's attitude, which is, hey, listen, I should be able to open an account very, very quickly, begin trading. And if I can't do it on one platform, I'll move on to the next one. And really, you know, the ability to get through compliance in a seamless, frictionless way and get the most people on your platform becomes a competitive advantage. And I think that was a real shift that we saw during COVID.
Absolutely. I want to stay on the COVID thing real fast, and Vishal, I want to jump to you because it's something that we've seen. I wonder if you could help us talk a little bit about, you know, in the typical money laundering solutions, there's a lot of times that we're looking for greed or nefarious activity. How are you guys seeing a change? And now it's a little bit more of desperation as well, right? Companies are going under, people are losing their jobs. Are you guys monitoring that activity in a different way at all? Or is it just coming up throughout your normal red flag activity that you're looking for?
Yeah, I think, Chris, that's a good example of like how we have to be nimble and start looking at other typologies or red flags that typically are not necessarily coded in your traditional AML systems, right? And COVID was a good example of that. We actually definitely leveraged our existing red flags and tried to see how we could tweak them. But more importantly, and this is the important thing, we spoke a lot with our peer banks, including you, right? So we kind of sort of got onto the call and we started saying, hey, what are the things that you guys are seeing different as a result of COVID? And what are the things that we can collectively as an organization or as a banking institution do something differently, right? So I think these collaborative ideas, because AML is not a competitive advantage to any one bank, it's really keeping the financial services industry safe and secure, right? So the more we can talk, the more we can collaborate, the more we can understand how we can leverage a point such as COVID and innovate or think differently as a collective us, I think that's definitely going to benefit the industry writ large. And that's what we did during COVID, right? We spoke with a lot of people. There wasn't a playbook that existed. Like you couldn't go and look at a FinCEN guidance and say that this is how you're going to operate going forward. I mean, yes, there were broad stroke guidances that were out there, but it was really through the industry coming together and figuring out what are the new red flags, the example of greed that you gave in, how does that sort of factor into our thinking, and what can we as a collective group do differently? And I think we innovated quite a bit in the last, not just TD, but I think, you know, all the banks in Canada, the banks in the US, we got together, we figured out how we could kind of move forward with these different typologies and come up with solutions that really benefited all of us.
I appreciate that. Yeah, it's quite honestly a hot topic, right? Of not only desperation and greed, but you know, shell companies are popping up everywhere, and people are trying to take advantage of government handouts, et cetera. So, you know, Steve, I want to sort of transfer over to you of talking in the know your customer and know your business spaces. So, you know, when you think about that and those programs, and the more digital we get, right, of being able to set up a company online or being able to do a lot of your transactions through electronic funds, what are ways that companies can continue to, you know, remain resilient in this digital space, and especially with some of the new things that we're seeing in this pandemic world?
Yeah,
it's interesting. I come from the cybersecurity space and have been in digital identity, you know, over the last couple of years. But the one thing that I learned over my time in cybersecurity is everything changes, and whatever approach you do to defend, whether it's your data, defend a transaction or your assets, you've got to have a lot of flexibility into it, because the regulations are going to change, but also the bad actors are going to be constantly changing. So if the one thing I talk when I talk to our customers about is, our mission is about building a platform and bringing that platform to our customers that, is flexible, right? Right now we ingest about 450 different data sources across, we can support up to 190 countries. And really the goal is to provide a flexible platform that customers, depending on their industry, their use cases, the regulations that they have to comply with, and specifically the different geographies that they're in, that they can pick and choose the data sources or the workflows or the friction that they want to put in front of their customers. So I think in our space, it's just not one size fits all. You need to come into it with a fair degree of flexibility. And that's when I think, Vishal, when you talked about vendors, is you really need to look at what's a platform that is not siloed with one type of data or one type of technique for identity, but what's a platform that's going to give me the most flexibility and allow me to adjust my workflow depending on the risk or the specific solution I'm bringing to market.
Yeah, it makes a lot of sense. Russell, I want to go over to you, right? There's these concepts around, I know a lot of institutions right now, specifically in the KYC and KYB space, and due diligence factors, that a lot of companies do periodic reviews. I'd like for you to talk a little bit about, the perpetual reviews, and how technologies can really help drive that space, and what types of efficiencies are gained, opportunities are gained, but also if there's any potential risks that people aren't thinking about in that space as they start to go down those journeys.
Yeah, perpetual KYB is really a trend that just started recently. If you look at financial institutions, periodic reviews is pretty much the standard still. Say, okay, every October, this risk class, we're going to check them this year, and we'll do the other batch next year. And Vishal, maybe some food for thought when we talk about compliance not being a competitive advantage. I think that if you can use, technology, you can actually turn that burden of compliance into a competitive advantage, because you can service your clients faster, you have a cost reduction. And when we look at perpetual KYB, you actually are able to achieve a situation where you have no more backlogs. When we have periodic reviews, the biggest cost factor is the backlog. You're always behind when it comes to working off the October review. If you have perpetual KYB, then you are actively monitoring the entities and the people behind on an ongoing basis. That means from a resource perspective, you can ensure that you have a baseline load on the KYC team or the KYB teams, right? The compliance teams overall. At the same time, there's obligations, for example, in the European Union, that financial institutions and payment service providers have to know when there is a change in their clients, right? Status or shareholders. And with perpetual KYB, you will know it the day it happens. And if you know it the day it happens, you can have internal systems that say, okay, there's an address change of this company, but they only moved, one zip code, or across town. Most likely that's not going to initiate a full KYB check, right? But there's a change of managing director. There's a lot of things you have to do there, right? You have to re-verify also the managing director and the person that is representing the company, right? Which will take you into KYC, from passport to identity verification, PEP and sanctions, and so forth. And if you only do this once a year, or maybe only 2 years, and so forth, in periodic reviews, that means you're always at risk of not only fines because of, maybe activities that are considered money laundering, but you're also not compliant because the systems are not in place. So achieving perpetual KYB is really about efficiencies on one hand, because you get rid of the backlogs. But on the other hand, you're improving your level of compliance, which automatically reduces your risk. And if you look at payment service providers, we've already seen a few achieve perpetual KYB. which means they've been able to adapt to the risk categorization and to the AML verification and so forth of their merchants as it happens. That means they can adjust the pricing. You know, there's industry changes with merchants and payment service provider. Today, they're a flower shop. Tomorrow, they're selling, you know, a licensed service and so forth. And the faster you can adapt to the change of the status in the client, the faster you can adapt the product, the service, the fees, and also your time to the first or ongoing revenues. So perpetual KYB is a challenge, but technologically and from a data set, it's already possible.
Makes a lot of sense. So Vishal, I'd like to, you know, we have time for one more question. Get your reaction to this as well. Of, you know, obviously, clearly in January there was a fine against Capital One, pretty hefty fine. We won't throw that number out there. But there's also headlines around organizations take note to do some digital transformation. I'd like to how are you guys focused on that? How do you look at the cost benefit analysis between what you're investing and what your return's going to be, right? Compliance is not a money-making space right now. So how are you dealing with that? How are you balancing those situations?
Yeah, Chris, that's a great point. And just using the Capital One example as a use case and then putting it aside for a second, you know, at TD, we believe in continuous improvement. And I'll definitely, you know, I agree with Russell that the more we think about how we can get more efficient and how we can actually reduce our costs, it's actually going to help us, right, move forward in getting more efficient. So our strategies are pretty transparent. Our solutions are pretty transparent with our external partners, be it regulators, as well as our internal audit friends. And really our transformative process at TD starts by looking at the customer journeys, something that both Steve and Russell had mentioned before as well, and taking an outside-in view of how we serve our customers. And then we build our programs to increase those efficiencies within the AML supply chain. And what I mean by the AML supply chain is taking an end-to-end view of how customers are onboarded, how they transact with TD, and then follow the data all the way to filing an SR or a CTR and looking at all the efficiencies that have been mentioned so far on this call along the way. In 2021, our focus is to continuously leverage machine learning and data management, and we are focused on enhancing our efficiencies, as we mentioned earlier, following the evolution of this new AML rules that we have, working within the industry with banks such as yourself, Chris, and other banks to innovate responsibly. And lastly, I'll mention that we are definitely collaborating with all our peer banks to build better processes as well as operating models that could benefit the industry writ large, right? And that's what I meant by, you know, let's sort of demystify AML and look at what the opportunities are that innovation and technology has brought in that we collectively can start using and making better decisions as we move forward.
I feel like I could talk to you three about this stuff all day long. So, but unfortunately, we're out of time. So first off, I want to thank PerformLine for bringing us all together and having this session. And thank you very much for your time today, Steve, Russell, and Vishal. Appreciate your expertise in this space and continue to learn as we move forward and get those bad guys, I guess. Have a great day, guys.